Hello, everyone, and welcome to our webinar today. Our hosts are Catherine Davis and Jackie Allen with Aflac. Guys, it's all yours.
Awesome. Thank you, Sarah, so much for having us as a part of your webinar series with UASA. Thrilled to be able to share today. We're going to have kind of a two-part approach since we are a new partner of the association. We're going to begin our first 15-20 minutes of the webinar talking just about Aflac as a company and what UASA members have access to through the association. And then we're going to segue into more of an educational topic around the foundations of employee engagement. That's an area of our subject matter expertise. Because we are in the employee benefits business, we deal a lot with small business owners, HR managers, and folks that are trying their best to attract and retain quality talent. So that's going to be the second part of our series. But I am going to begin sharing my screen here in just a moment. And I'm looking forward to beginning to share a little bit about what it is that we can do for you guys as UASA members. So, perfect. Okay, I see my screen is rolling. Today, obviously, my name is Catherine James. I am previously Catherine Davis. I've been with Aflac a long time, so Outlook kind of has a case of mistaken identity. I'm Davis or James, depending on where you look. This is my contact information. In just a moment, you're going to hear from Jackie Allen, who is a tenured Aflac benefit counselor, and one of his clients, Sloan Appliance, is a member of UASA, and that is how we were able to connect with Sarah and begin the partnership with the association. So I'm sure that many of you guys have seen the duck on TV and have had some level of familiarity with Aflac. Of course, we've got Nick Saban and Coach Prime on television sharing a lot about Aflac, but not everybody knows exactly what we do. Certainly, we're highly ranked among the Fortune 125. We've got many accolades, and are certainly very well known for what we do and the service we provide. These are just a few of our accolades. But more importantly, I wanted to kind of begin with almost what I like to call a myth busters. So many people have seen the Aflac duck on TV and potentially think that they know what we do. But I have been doing this for 10 years, and I have found that there are actually a lot of misconceptions about what Aflac is. You as a small business owner today may know that Aflac is insurance. I don't know about you, but I have my own LLC. I own an Aflac agency. So when I hear insurance as a small business owner, I think, oh man, last thing that I want to deal with. I'm not excited to deal with any sort of insurance. I just prefer to run my business. That is kind of the type of insurance we specialize in. I always say we are the benefits for companies that do not offer any benefits. So what that means is we are not health insurance. If you're a small to mid-sized employer, I know Sarah shared with me that there are members as small as member companies as small as 3 employees up to more larger organizations. It's likely that if you're on the smaller side, you may not offer any benefits whatsoever to your staff for good reason, right? You legally don't have to if you're not over 50 employees, and it's expensive. You're already trying to control costs as much as you can and be profitable. So it just doesn't seem like benefits are in any way going to fit into your bottom line. That is what Aflac does. We are different than health insurance, and we don't cost the business anything. Aflac is 100% funded by employees via payroll deduction. So again, like I mentioned, we're the benefits for companies that can't afford benefits, right? It's no expense to the organization outside of the cost to administer a payroll deduction. But it helps in a lot of different areas. Now, like I mentioned, we are not primary health insurance. We are what is called voluntary or supplemental insurance. So here's what that means. Like I said, we're not Blue Cross and Blue Shield. Aflac is different because we pay the policyholder, not the provider. So if you have typical health insurance that pays, hopefully a good chunk of your medical bill, you're still left with what's remaining, the copays, deductibles, things like that. Aflac doesn't pay the provider, we pay the policyholder. So if you have an Aflac policy or one of your employees does, and something happens to them that's covered under the plan, when you go to file your claim, You upload your medical documents and your smartphone into the Aflac app or with your Aflac agent, and those funds are direct deposited into your bank account. And here's the reason that that is important. Most people have less than $1,000 in savings to help manage an unexpected emergency. If you run a small business, it is likely that your employee base lives paycheck to paycheck. If you're a small business owner, I would wager to say that at some point, someone has asked you for a loan when they have fallen on hard times or been unable to work. And you and I both know that's not great company policy, right? If something unexpected happens, you have compassion for your staff member, but you'd rather not get in a position of a payday advance or something like that. So having a policy like Aflac in place that the employees can take advantage of is a great risk management strategy for your company, in the sense that you're able to say once a year, hey guys, we love you, we care about you. We've brought in Representative Jackie, right, in the instance of where we live here in Columbia, South Carolina, to help give you access to policies that would make sure that if something unexpected happened to you, you could still pay your bills. You would still have money coming in. I care about you, but I can't pay your mortgage if you're out for 8 weeks due to surgery. I'm a small business and I don't have the capital to do that. But nonetheless, I care about you. And I want to make sure that if something happens, you have access to some policies that could help make sure that you're taken care of during your time of need. So that's kind of what it does for your employee. It helps protect them if something were to happen, but it also helps you as a business owner. If you look at the menu of different things here on my screen that you can offer to your staff base, it's exciting for your staff because they have a plethora of options that's available on their benefits menu. But it's exciting for you as an employer because you've now got the ability to attract and retain better staff with potentially a better benefits offering. If you're advertising on Indeed or any other job boards, you can now post benefits offered, accident, cancer, critical illness, the laundry list goes on. That's going to get you more applicants than a blank benefit summary page or something where, you know, it's not referenced at all because you'd rather avoid the topic, right? So it's definitely a good way to help you be competitive in one of the most challenging hiring landscapes that our country's ever seen. I do not have to tell you that if you own a small business, but it is low risk. You know, as a business owner, you're always thinking and strategizing and trying to say, okay, what can I do different? How can I set myself apart from the competition? What can I do to be successful or outsource or streamline? And usually you're looking at a business decision in terms of cost benefit analysis. Here's what I mean by that. Is the juice worth the squeeze? On a very basic level, is the money I'm investing going to save me time or money elsewhere to make it worth it? Now, people always say that Aflac doesn't cost the business anything. That's not entirely true. It costs a little bit of time in the form of some slightly disrupted productivity that it takes for your staff to be properly educated. Once a year, a benefit counselor needs to meet with them and make sure that they understand what's made available and that they can take advantage of whatever options they so choose. But if you look at the disruption in productivity that once a year is needed to just make sure your staff knows on a basic level what's made available to them, it is far outweighed by the fact that either A, it can help you keep and retain existing employees, helps keep them happier, helps keep them more engaged. At minimum, you know, they're not going to hate you for this, right? Even if it doesn't move the needle tremendously, it's a very low risk decision. It could help you hire a key employee to be able to say, yes, we offer dental, vision, life. Hey, Sally, Joe applicant, we offer pretty much everything but medical insurance. And that might get you a key hire that could be on their spouse's plan for the medical and be under your organization for everything else. But regardless, you know, when I make business decisions for my agency, I think, okay, could this move the needle? And if the answer is, I don't know, as long as it's not a tremendous expense, I'm willing to at least try, because sometimes in business, you have to experiment and you have to try a variety of different things to see what would move the needle. So again, this is low risk, high gain, right? If it doesn't move the needle much, it's not like you came out of pocket to make it available. And certainly it helps keep your existing staff happy. What staff member wouldn't want to have access to affordable benefits that are anywhere from $6 to $12 a week? You know, most folks are interested in these policies. And it's really no skin off your back as a business owner. So that is really what we're able to offer to association members. In terms of getting in touch with us, that's going to be on the slide that we end with. We have a calendar link where you can book an appointment with us. We'll do a consultation for you, ask you some questions about your business, your number of employees, do you have an existing benefit package in place, and then make recommendations on how Aflac could fit into your benefit package. If you are wanting to make the decision to get started and put Aflac in, we will connect you with a local benefit advisor in our Agent Hub app based on your geography. So, if you're in Plano, Texas, we will find a benefit counselor, connect with them, and set up an on-site meeting to get your benefit package taken care of. But as the association partner, all of the initial consultations and discovery meetings will run through our office. And then if we've got hey, I'd like to move forward and, after the vetting process, put Aflac in place in my benefit package, we'll then connect you locally from there. So that's a little bit more about our process, how the association partnership works. Our link is on the last slide, and I will make sure to connect with Maggie and Sarah following the webinar to ensure that the calendar link is also sent out via UASA communication so that you have multiple ways to get in touch with us and make sure that we're able to get to you if this is something that you like more information on and you'd like to do a consultation in regards to your business. But I'm going to highlight the person that connected us with UASA in the first place. Very excited to introduce Jackie Allen. He is a tenured veteran associate here with us in Columbia, South Carolina, and Sloan Appliance has been a customer of his for many, many years. And Sloan Appliance and Debbie are members of UASA, and they thought enough of Jackie and his service that they wanted to recommend Aflac to Sarah and the association as a whole as a partner. So to that end, knowing that the real experience you get with Aflac is a local counselor in your area that makes sure that you and your team are covered, I'm going to turn it over to Jackie to share a little bit about his passion for claims and service, his tenure with Aflac, and a little bit about why local service is so important so that you can get a good sense of the experience that you're going to have as an association member. So with that, Jackie, if you can unmute and just share a little bit to that end. All right, and I am just making sure we've got Jackie off mute.
Am I
There
being
you
heard?
go. Yep, we got you.
Okay. Again, my name is Jackie Allen. I've been working with Aflac since 1997 here in the Columbia area. Matter of fact, Sloan Appliance has been one of my customers since 1997. I'm now in the third different owner of Sloan Appliance. Fred Holbrook, I think, still may be a member of the y'all's association on the board. And of course, I know Debbie, the new owners, and so forth. And it's been my privilege to service these guys for many, many years. One thing about me, and hopefully all the Aflac representatives, agents that would help you guys in your locations and so forth, is service after the sale. All any insurance is a promise about what you can expect and what it's planning on doing and so forth. But my purpose in all of this is make sure that once you have signed up for whatever product you'd like to have in your repertoire of benefits, I want to make sure there's never a dumb question. I want to make sure that people can call me, even if you're out of state or whatever, if you don't understand something. I want to make sure that you understand exactly how these policies work and make sure you have any questions about claims, forms, and so forth that I can assist you in, because service is what I built my business on for all these many years, and it's served me many years now, for over 26, 27 years. But that's my biggest thing as far as making sure once the promise has been delivered, that we can deliver to you the benefits that you deserve in a very timely manner. And like I said, if there's ever any questions about anything, I'm always available by phone call, text, or email and so forth to get things handled for you. But hopefully y'all will see benefits in these products as so many other companies across the country have. And I think Sloan has definitely done it, experienced these successes for their folks. And with that, I'll just turn it back to you, Catherine and Sarah.
All right. Thank you, Jackie. Guys, he is in earnest when he says that he is a legacy in the community. I had the privilege of working with Jackie when I started. And there are many folks in your local areas that have been doing this for a very long time that we will vet through the association to make sure that you have somebody who is very well connected in their community and knows exactly what it is that you need that's been working with small businesses for years, that has compassion for your challenges and your goals, and is going to be there to help you grow your business and take care of your employees. But with that, we're going to transition to the webinar topic of today. This is a subject, like I mentioned, that I'm passionate about as someone who meets with many business owners and HR managers on a regular basis. And it's a very important challenge these days. It's employee engagement. It is a very hot topic with the Great Resignation and the hiring challenges that we see in today's world. It's going to be something that hopefully is educational for you and would potentially be something that is going to help you see, hey, what can I do to move the needle with who I currently have, and how can I potentially engage folks that may not work here with me? Obviously, benefits are a part of that, which is why this is kind of in our wheelhouse. But I'm excited to go ahead and get started on this topic for today. So I always joke and say, congratulations, you opened a small business. Now there's a whole lot of problems. I don't know if any of you are recently in the ownership of a business. I know that maybe you bought or sold a business, or you've been doing this for many years. I've interacted with many business owners over my time as a business-to-business benefits consultant. And I can tell you, whether you are new or whether you are tenured, there are many, many moments where as a small business owner, you look like this guy, right? What did I do? I'm very good at my job, right? I've got a skilled trade and I was enjoying that. I decided I wanted to work for myself. And now all of a sudden, I don't just make widgets. Obviously you guys don't make widgets. You're in the you're in the appliance service business, but now you've got to be a business owner. It's not just being good at your trade. It's acquiring clients. It's making sure that invoices get paid on time. It's making sure that you have the right employees that can help fulfill your business. So all of a sudden you're having to be a subject matter expert on things that are outside of your technical training or the training in your field. So kudos to Sarah and team for bringing in training content that's relevant, not just to the technical aspect of appliance service, which I hear you guys have an awesome library of resources, but bringing in folks that are able to speak to the business ownership aspect and give you good feedback and education on those items as well. But if this is you, don't worry. This is a double-edged sword that many business owners find is challenging as you try to scale your business, right? Hiring employees is not for the faint of heart. This is one of the most challenging employment markets in U.S. history, but you are not alone in that. You've got great resources with UASA and hopefully in Jackie and myself and benefit counselors around the U.S., another tool in your tool belt, as it were. But we're going to talk big picture today in terms of what do you do as you are trying to manage the Great Resignation, right? This is not news to anyone. We've seen understaffed restaurants. We've seen, reduced hours. Most businesses have help wanted signs out there. Statistics would actually tell us that it is not only expensive to find employees, it's actually expensive to lose them too, right? So you have a hiring expense, a ramp up expense, and you also have a exit expense is what we'll call it. But a lot of people hear about the cost of turnover, right? And I'm thinking to yourself, I don't think that this is interaction. I don't think the chat's enabled, but I'm going to just have you consider this question to yourself before I give you the answer. Think to yourself, What does it cost your business to hire an employee? So think about that real quick. If you have a piece of scratch paper, jot it down. Think to yourself, okay, background checks, how long do I have to run an Indeed ad to maybe find somebody? Just write down on a piece of paper, what is my hiring cost? So I'm going to give you 30 seconds. Just make a commitment to yourself. If you're dialed into this webinar, if you're driving, just think in your own head, what does it cost me to hire somebody? So hopefully you've had just a quick minute to consider and think and let that question percolate. Now I want you to think, okay, what does it cost me to lose an employee? And again, that could be, does it cost you time because you're going out in the field? Does it cost you overtime pay for another employee that's covering for them? There's a lot of different ways to calculate it. But I just want you to kind of stop for just a moment before I give you some more quote unquote professional answers to this question and think, what is that expense to me to bring somebody in, and then if they end up leaving? So there's a lot of different ways to approach this question, right? Just like the answers that I gave as examples, whether it's a background check or different people covering when you're short-staffed. But the Gallup, which is a publication that does employee engagement and HR consulting, a Gallup poll based on data that was delivered. And if you want to see the study, it's in the end of my deck, but it costs 30 to 50% of an employee's salary in direct costs when the employee turns over, meaning the Indeed post that's inevitably going to come when you're having to replace them, the background checks of folks that are coming on board after that, right? Depending on your industry, it's all going to vary. But on average, it's 30 to 50% of an employee's salary in direct costs for an entry-level person to lose them. Mid-level to senior level. So if you lose a manager that's been with you 10, 15 years, over time, right? Not all the way up front, but in terms of indirect lost productivity, potentially lost customers, lost efficiency over a period of a few years, as you're working to replace that person that's integral to your organization, it can be 150 to 400% of that person's salary and lost revenue. So don't panic. I know that sounds like a lot of money. But my reason for highlighting this information is you want to do everything in your power to play really good defense and really good offense. And here's what I mean by that. Defense is going to be trying to retain the people you have, and offense is going to be trying to hire good people from the jump that you feel least likely to lose, right? But obviously nowadays that's no easy task. I don't have to tell you. You know this intuitively. You're a business owner. You probably aren't thinking, yeah, I'd love to have some turnover. But there's this great resignation mindset. Post-COVID, people may not quite, I guess tolerate is the wrong word, but there's just a different level of mindset of, well, if this doesn't work out for me, or if this doesn't suit me, I'm headed out to hit the road. So what happens is there's a whole separate set of issues with employee engagement. Employers may be so afraid to lose somebody that they tiptoe around them or don't set clear expectations. But then that puts you in a position as an employer of you're spending payroll dollars for no return, right? You're spending it on staff who may not contribute in a meaningful way anyway, because you're too scared to lose that person, and maybe they know it, right? So you have to look yourself in the mirror and say, is it better to have nobody than somebody at this point? Like what is really the cost? But I don't think that's always the case, right? There's probably staff that really want engagement and direction, but they find themselves without clear set expectations because you as an employer may be too afraid to rock the boat, or you don't know how to set them, right? You're not an HR manager by trade. You're not a manager in your past life. Maybe your experience is mostly technical, right? And, you're really good at appliance service, but maybe not necessarily as skilled at that engagement people piece. So that's really what today is about. So forgive the football metaphor, but it's fall. We're going to talk, like I said, about both offense and defense when it comes to employee engagement. Engagement and setting the stage really starts at the interview, and setting yourself apart from other small businesses is a big piece of what we're going to cover today, because you have to understand your strengths. If you're competing with Walmart or you're competing with a big organization that might have, jobs available in your same trade, that's going to be a different approach. But defense is definitely something that's important. Keeping your most valuable folks productive and engaged. But we also want to talk about offense, right? If your business is growing, if you're trying to scale your organization and you have enough influx of customers that you need to hire, how do you do that well? How do you get it right the first time? So we're going to cover both, but think to yourself today, hey, what is most critical for me? What is going to be most important in my takeaways from today's webinar series? Is it offense? Am I in big growth mode? Am I really trying to make sure that whether it's 2 new employees this year or 5 new employees this year, that those are the right people, that I get it right the first time? Or is it defense? You've got a family run business, you're pretty well established where you are, but because that's the case, you've got 1 or 2 trusted people that have years of a wealth of knowledge related to your business. And it would be pretty detrimental to your company if you ever ended up having to replace them. So what does defense look like for you? But whether either of those is a priority or whether both are, we're going to cover both. So we're going to get started with offense, engaging employees in the recruiting process. So that being said, think to yourself, I own a small business. Potentially, right? Or a medium-sized business, but from what I understand from Sarah, none of you guys are the size of Walmart, right? You're not Google, you're not Amazon, you don't have the budget of a multi-billion-dollar corporation. That's why you're in an association, right? You're able to source what a large business could via a group. So knowing that to be the case, you're clearly a member of this association. You're somewhat motivated to think like a big business while operating as a small one. But think about that. You have competitive differentiators over, say, a Walmart, right? Or any other large conglomerate that specializes in appliance service. But think to yourself, what is that? What are the advantages of working for a small business over a big one? If you're hiring someone, what are some of the things that might appeal to them about working for you rather than working for a multi-billion-dollar corporation? So I'm going to pause just a minute and allow you to think of a couple things that you feel set you apart as an employer. And then we're going to go through some of the typical answers. So we've got a couple answers here, right? With the small business, why would somebody pick you? Typically the answers I hear from small business owners when I talk to them is flexibility, right? I've had the same office manager for many years and I don't really micromanage her PTO. If she needs to pick her kids up from school because they're sick, we just, as long as she gets her work done, it is what it is. That's definitely something I've heard over the years. You have influence. You're able to make a difference that you can see right now today. If you're in a small business and you're an employee working there, your work is kind of easy to measure because you're one of a few. And for many people, they like that level of motivation and influence. They feel like they can make a difference in the world when they're not just a number for a big corporation. You can also advance faster. Many people like the idea of, hey, if I'm almost in an apprenticeship type role at this organization, I can move up quicker. I can negotiate for my salary more easily if I bring value and I help drive revenue for the company. And they like that approach, having a little bit more control over their own destiny if they're successful. So that's why a lot of people pick a small business. That's why they say, hey, I'm going to go to work for ABC Appliance Service because of these reasons. Now, you probably know the answer to this, but again, why not? Why would an employee go work for a big multi-billion-dollar corporation over you? Ding, ding, ding. Right. Better benefits, possible security, maybe better pay, but again, just the bigger bank account, usually the perceived security, and oftentimes better benefits. So knowing that to be the case, knowing what your competitive advantages are and disadvantages, you have to leverage those when you talk to your candidate, right? You have to be mindful of both your advantages and disadvantages in relation to larger employers. And that's the name of the game when you're interviewing and hiring someone. Leverage and play to your strengths. Now, again, obviously you have to do that within the realm of what's possible and what finances dictate you can do. Most small business owners would want to do all the things for a candidate. Heck, I'd like to put a pet unicorn in an offer letter to my administrator if I could, but I don't quite have the budget for that, right? But I do what I can. Money and time dictate what you can and can't do. So again, like I mentioned, as a small business owner, leverage your strengths and look at low risk, high gain strategies, things that don't cost you a lot. And you may not know if they're going to pay off, but you have the luxury of trying because they're very low risk in nature, in the sense that maybe they're an indirect cost to your business, or a very low cost to your business. And you can kind of just see where the chips fall in terms of who knows what might motivate a prospective or current employee. But you might as well try and figure it out. Do a variety of different things to help make your business an appealing place to work. There's no silver bullet when it comes to these things, but in this UASA environment, that's the goal, to give you resources so that you don't have to be a subject matter expert on everything, right? You're an expert in the form of appliance service. You don't need to be a CPA, an insurance agent, a building inspector, and a DHEC inspector all at the same time. So again, both today in this specific subject, and throughout the association webinar curriculum, and the conference that's in Vegas and all the different things that they've got available to you guys, get resources from people that, hopefully are fairly affordable for you. And if not much changed, at least it didn't take away budget from something else, right? You can always grow your business by growing your own mindset. But that being the case, let's talk about some examples of what I call low risk, high gain strategies for growth. As it relates to employee engagement and, hiring strategies. So one is what I like to call customized working conditions. That is a big thing that you as an employer have a lot more control over that a big Fortune 125 might not as much, right? A big company is going to have, although there's certainly perks nowadays, you've got companies that tout the ability to work remote and what have you. There's still a very big corporate hand feel to some of the working conditions at a lot of large corporations. There's not a lot of flexibility because they can't change quickly. They're not agile. They can't just say, hey, it's just you and me here, Sally Joe employee. Let's come to an agreement on what works for you. So that being the case, having customized working conditions based on your employees can be really helpful, especially with the Great Resignation. Post-COVID, a lot of people realized, hey, life is too short. I don't want to work in an environment that disrupts my work-life balance. It's just not worth it. So this can set the tone for your culture, and sometimes it can even trump pay. My administrator that works for me could probably do something that would allow her to make more money. But because I allow her to work remote every day after 2:30, and she has an hour where she clocks out to go pick up her kids from school, they're pretty well behaved. She does all of her phone calls before 2:30, and everything is email communication after that point. It's so much better for her. She doesn't have to pay for aftercare for her kids who are in public schools. And so because of that savings to her, in the form of less childcare payment, ability for her to pop over and answer a homework question before she goes back to her emails. That was a tremendous differentiator for me in terms of her ability to be engaged in her work and feel like, hey, she has the talent to go make more than I can pay her. But the work-life balance that I'm able to provide and the savings that she would probably have to spend on additional childcare would be eaten up in her higher salary if she were working somewhere else anyway. So that's one example of, hey, I can set myself apart from my competition of a multi-billion-dollar organization by working with my employee to have a conversation about expectations, right? You're working towards outcomes, not hours sometimes. And if you can measure somebody's productivity, you don't have to say, hey, I'm going to really mind the clock, or I'm going to really, really micromanage X, Y, and Z. For some people, you do have to do that. Again, right? It's the employee and their level of work ethic and what it is that they're able to put out there. But that's a certainly great strategy if you have somebody that's self-motivated, but just may have some life circumstances that require flexibility from you as an employer. And I find that that inspires such a tremendous amount of loyalty that will pay you back in spades. It's easy to fear letting go of the reins and thinking, oh man, if I give them too much leash, they'll just ride the clock and not do much. And some people might, right? Know your employees, manage according to their personal disposition. But this is something to consider that can be really, really helpful when it comes to setting yourself apart from other organizations. Something else is voluntary or staff-funded benefits. And again, this is the business that Jackie and I are in. So many businesses that I've worked for have told me when we do a consultation, yeah, my staff keep asking for insurance and I keep having to say no because I can't pay for it, right? You can do a voluntary program. I have in no way the ability to pay for my one employee's health insurance. She's on her husband's health insurance, but I contribute a small amount to her retirement and I give her $60 a month towards any Aflac benefits that she would like to take advantage of. And then anything above and beyond that amount, she payroll deducts the difference. So just the fact that she has some flexibility and she has something really helps with that loyalty. She can pick whatever it is that she wants from a wide menu of options. And in fact, this year she just changed. She said, hey, I don't need that. I'd like to swap it out for this. So again, going back to that point that Jackie made about service, annual open enrollments, making sure that every year employees can customize benefits to their changing lifestyle really, really helps with that morale. But ultimately, this can be a very reduced expense for you as an employer, but it helps make you look like a bigger company, right? You have a larger menu of options available. Think of that first slide that I had up for you guys with all the benefits that, you know, we can offer as your association partner. If you could copy and paste all of that on your Indeed post, what would that do for the traffic? What would that do for the conversation? And, you know, ultimately it's a very low expense. You know, if you can't afford PTO or you only have very limited PTO that you can pay for, making sure they have access to products like short-term disability that could pick up after that, that you don't have to pay for, that they could fund voluntarily, would really help make sure that, you know, you've got them covered no matter what the case might be. But really the time investment is made by whoever it is that's educating your employees, and the financial investment is made by your staff. So your only investment in this instance is the time it takes to run payroll and the time it takes to disrupt some productivity once a year to have each staff member have about 15-20 minutes to chat with a counselor, right? On company time. I know, right? When I ask my administrator to go to the store or, you know, plan a Christmas party or something that doesn't directly build revenue, it's like, okay, well, it's not super often. I can justify that. Same thing here. I'm allowing her to be clocked in on company time and understand a benefits review, but that's a very small expense relative to the lift you get in morale and just overall satisfaction of, hey, yes, we do offer something. So, you know, it's funny. I got a call from a client once that he was in the middle of an interview, trying to recruit somebody. And he said, hey, can you tell me how that dental plan works? Right. He was trying to close somebody in an interview and picked up the phone and called me and said, hey, can you, I'm gonna put you on speaker. Can you talk to this prospective employee and make sure he understands the potential dental coverage he would get if he came to work here, that he could pay for? And so use your resources, right? Leverage who you have. Don't try to be the subject matter expert. You may not be able to pay for it, but you can make an array of options available, and that does make you competitive. And again, outside consultants, you're already in the right room now because this association is a form of outside consultant. Whether it be a financial advisor, insurance agents that sell direct to individuals, employee marketplace plans for Obamacare. There's lots of different ways that if you simply allow somebody to make a presentation on company time, it's perceived as an employee benefit, even if you're not paying for it, right? There's lots of different things that you can do. Having a financial advisor come and present to your staff, even if, you know, you don't pay for any sort of retirement plan or can't afford to. But if it's done on company time, oftentimes the employee associates it as some form of an employee benefit. because that's a resource that they wouldn't have any other means of curating themselves, right? People look to an employer to give them resources on insurance, on retirement, on all those different things. And even if you can't pay for it directly, being a resource and committing to giving them access during company time is going to help you feel like a big business again when you're a small one. Ultimately, when we're talking about resources too, same thing goes with recruiting. A lot of, if this is something that you're into right now and something that you're working really hard on, maximize a free job board or a free trial to figure out your ROI. Track and input, some of the job boards and make sure that, hey, yes, I have enough data to know that this is something that I want to invest in before getting, too much money invested. There's, I know myself, I use Free Indeed all the time. You've got ZipRecruiter, lots of different resources where you can kind of test drive it and see what works or what doesn't. And then track your data. We actually have something, if you're hiring pretty rapidly, we have some resources for that as well through a partner company called Get Hired that we could also consult on if that's something that you're interested in talking about in a one-on-one. But ultimately, there are a lot of companies that can help you, whether it is tax write-offs or tax benefits that you may not know you're eligible for, like work opportunity tax credits, employee retention credits, finding people that can connect you with resources that could save you money that you may not have considered. So it's an all faucets on approach. You never know as a small business owner what's going to move the needle. And you probably know that, right? If you've been in business long enough, you kind of have to try a variety of different things to see what works. It takes a lot of energy and focus, but you can't bank on one silver bullet to get you across the finish line. You have to try a variety of different things and see what will work. So this is a super punishing job market and you can go nuts trying to find one silver bullet. People are fickle, right? I'm sure I don't have to tell you that. Human beings are fickle and it's hard to predict what they want, unfortunately. So that being the case, have as many different things going at one time as possible to set you apart from other employers and spread your risk with multiple different strategies going at one time and outsourcing as much as you can to kind of make that all work. If it's cost and time effective, in the sense that you don't have a lot to lose to try it, whether it's a free job board or having somebody come in and do a presentation during work hours or whatever the case may be, try it. You never know what's going to move the needle. But all faucets on, you need all different strategies on that you can possibly think of so that you can figure out what's going to work. Let's talk defense. We've talked a little bit about hiring and how to bring in the right people in the door. Once we get them here, how do we make them stay? So we're going to talk about when I say defense, we obviously have to engage, measure, and still hold employees accountable. People that feel like you're too much of a cupcake may not respect you, or if you're too much of a blowhard or somebody that's unkind, that's gonna hurt you as well. So we're gonna talk about that middle ground, measuring to motivate and not micromanage. Especially in remote environments and with the Great Resignation on the rise, it's so important to know how to manage performance. When you can't always see your employees, or maybe they're out in the field and you're not there with them when they're doing something, it's scary to outsource to somebody or to delegate, right? If you own a business and you have employees, you are trusting that other people representing your brand and your name in the community with your business logo on their polo are going to do what you promised. And you have to pray that it happens, right? So while that can be scary, you can't really grow without doing that. You have to trust somebody else, but you want to have ways to measure that. If you're a kind of startup or a solopreneur and you're not really used to managing staff, again, you're an expertise in your technical field, but not in managing people, you might struggle here. So, staff don't want to be micromanaged, but employers want to make sure that, hey, am I getting a return on investment for the payroll dollars I'm putting into this person? Like, I don't want you to be, so demotivated that you quit, but I need to know that you're worth the salary I'm paying you, right? That can be a brash way to put it, but that's how the bottom line works. I'm paying you X. Is that justified based on what you're getting accomplished here? So working towards an outcomes, not hours mindset, I think creates a very positive culture because staff knows expectations. and they can work towards those expectations independently, leaving you extra time as the owner to drive revenue and find new clients or do whatever you need to do. And the employee is free to operate at their own pace within reason, as long as they hit key metrics aligned with their job duties. So again, going back to my employee that I have working here, we have a one-on-one review each Friday where we go over key action items, go through what's been accomplished during the week. If she wasn't investing the correct amount of time based on what I pay her, I would discover it as we were going through the week's items and be able to very quickly realize we didn't really put in a full week's work, right? Because we go through the expectations of phone call dials and reach outs and contracts submitted and things of that nature. Whatever is important in my business, whatever I need to do, we measure it and we have a conversation if it didn't get done. Did you not have the right tools? Did you not have the right resources? Did a personal matter get up? How are we going to catch up next week? Right? What happened and what are we going to do to change it? But what that does is it makes it black and white, right? There's no opinions as it relates to whether or not your job was done well. So that allows a lot of freedom in the process. I don't have to look over her shoulder at the end of every day or, at every hour or so and wonder if she's doing her job correctly, because I know I'm going to measure it on Friday and I know, ultimately she's going to have to be accountable for what she's done. So, I don't have to constantly disrupt what I'm doing to go check on her. And I think compensation drives behavior too. My administrator's job is recruiting. So she's bonused $100 biweekly if she has 9-second interviews conducted per pay period. And then I do quarterly bonuses and things like that. So again, because she wants to earn these bonuses, I'm essentially just reinvesting some of the profitability that I have back into her. And I don't have to micromanage her as much because she's motivated to get these bonuses. Now I can afford to pay them to her because it's just a percentage of revenue she's making me by performing well. I've been able to do the math on it to make sure, hey, I'm only paying this if you do X. So I know that I can afford to do it, right? And we cover progress each Friday in our weekly review, and we can adjust as needed. And it gets her the coaching that she needs to be successful. I offer her 2 offer letters every time I give her a raise. You can have a higher base pay and less bonus, or you can have higher bonus and less base pay. And it allows her to kind of customize her earnings. Now, within reason, I can afford both offers. Obviously, I wouldn't have put them out there if not. But that's what I've been able to do to help keep her motivated and to make her want to do what she's supposed to do instead of being like, well, I get paid the same amount regardless. And, I'm just going to ride the clock and be here, to do the bare minimum that I have to do with the least sense of urgency possible. She feels that I'm investing back in her a portion of the increase in revenues that I see. And so she feels like a member of the team and that she has some control. In fact, she actually saved me some money in terms of a monthly subscription. And I actually paid that to her in a bonus this summer that she utilized for summer childcare. So, if someone saves you money, give them a portion of it back in the form of a bonus. If they caught an expense or, found something that helped you be more profitable, show them and incentivize that behavior by, hey, here's a portion of it. Thanks for doing that. Thanks for paying attention and not just being along for the ride. But with that, we're looking for outcomes, not hours. This isn't a super interactive format. I think it's more webinar than, participants being able to give feedback. But I'm still going to share this case study. I thought it was informative and it's something for you to think about. Let's say you're hiring an office manager. Let's say their key job duties include invoicing customers and ensuring prompt payment and scheduling technicians to go out for estimates and service from inbound calls. Let's say it's a very competitive market and maybe there's multiple people that do what you do in your area, and just a few hours response time can mean business loss to your competitors. So again, you're delegating, you're having to hope that someone who makes, a certain amount of dollars per hour is going to have the proper sense of urgency and task management and prioritizing what's urgent and money-making activities to do this well, right? If they're receiving those inbound calls, you have to hope that they operate with the right amount of urgency. So, what would you do? How could you structure a compensation program that would incentivize them to do the things that make you money, pay for what you want, right? incentivize positive behaviors. So you could do a biweekly program of every invoice that got paid within 24 hours of being sent, they get a bonus or a percentage of it, right? That would help your cash flow because, you know, if the invoice is paid faster because your office manager is following up with people and making sure they got it and that it doesn't sit or they forgot about it, that's going to help your cash flow, and they'll be incentivized to do so if they get, you know, if they get a bonus off of every invoice that was paid within 24 hours of receipt. You know, you can do lots of different things. But again, I don't know your business super intricately. So this is just a hypothetical based off of businesses that I've worked with in the past. But think about, how do I incentivize the right behaviors with some level of performance-based compensation that can incentivize the right behaviors so that I don't have to micromanage, right? That's really the long-term goal. But last thing is, knowing that being the case, we just talked about compensation percentages, ways to encourage and motivate your staff, financially speaking. Let's talk about an annual review process to end us. We got 9 minutes, it looks like, and this will be the last piece. We certainly can stay on for closing remarks and questions. But like I mentioned, compensation drives behavior, and you don't want to micromanage, but you still want to drive revenue to your organization. So as a small business owner, how do you not just annually, but ongoingly coach your employee? Like I talked about, you know, you need to do this consistently to get it to stick. Weekly reviews, having time set aside to work on your business, just not just in your business with your employee, and talking with them about their key priorities instead of just, hey, I need something. Okay, bye. Right. Yes, it's time invested, but the ability to coach and to get your staff member aligned with your goals is going to be a tremendous return if you just block out that time to do it. So the benefits, I always say, Ohio, only handle it once, right? If something comes up that's important, it's easy for it to get overlooked, or you're running sideways, or your staff member's like, I've never been trained on how to do that. What is this? I don't know what this means. And then you just plan to do it yourself. And then there's no point in you paying somebody because you keep doing things yourself, even though you have staff. It's a song that never ends for a small business owner, right? I'm a big fan of Ohio, only handle it once. If something comes up, either handle it immediately or calendar a time to do it, right? Don't try to touch it 2 times. So I like to put things in the refrigerator. If something comes up where, you know, let's say account transfers, one of my administrators hadn't been trained on it. I had an account transfer need come up, and it wasn't so urgent that it needed to be complete right that minute. And I said, hey, Starla, on Friday, during our one-on-one, I have an opportunity to train you on X, right? Put it in the refrigerator, put it in the agenda, and then you don't think about it until that time. But ultimately what it does is it helps you reduce that never-ending to-do list and disorganization. Put it somewhere safe in the refrigerator, add it to the agenda of a meeting so that it gets handled, or handle it right then. Don't let it sit or put it on a scratch piece of paper or shoved under your car, because it's going to get lost, right? And it's going to get overlooked. But, you know, when you're coaching consistently, those that can't or won't are going to self-select out. If you have consistent weekly meetings with somebody and they're not meeting expectation, you're not going to have to fire them and then have an unemployment claim against you. They're going to be so uncomfortable with the fact that they have to own up for their own lack of performance on a weekly basis that they're going to be uncomfortable enough that they leave, they resign. Now, it's another good thing in today's employment market, they should probably be able to find another job. So it's less likely you're going to have the horrible expense of an unemployment claim against you for having to terminate somebody. You need to have enough accountability with them that they self-select out. So that's one benefit. Another is that those that can and will are going to perform a lot better. I can't tell you how big of a difference I see if we've gone without a one-on-one coaching session for, you know, a holiday, or, you know, somebody was sick or what have you. When we're out of that consistent communication about goals, there's a loss of vision from my staff base, right? They don't quite have the best understanding of my key priorities, and they actually crave that. The good ones want to know, hey, I need some direction. What is it that you'd like me to do? Where do you want me to go with this? Your business is going to perform better and faster if you just set that time aside and sacrifice it once for that long-term growth. Another thing is people agree with their own data. So it's kind of hard to argue with, hey, we agreed that Most invoices need to be paid within 24 hours. And 75% of the invoices you're sending out sit for a week. Like, what do we need to do different? It's objective. It's in black and white. It was part of their job duties when they accepted a position, and it's not occurring, right? It's not personal. It's not emotional. It is what it is. And then it makes your hard decisions easier. If you have to make a change with somebody, you know that you need to, you know that it's not working, and you're able to make that change. Annual reviews too. Just like I talked about, best practices or give some options and skin in the game. Like I gave my administrator 2 separate options. They made her feel like she had some control. Employer paid incentives that you can afford are really good. Like every year I try to add in or throw in a little something extra for her. This doesn't break the bank, but it's just a little something extra that makes her feel like she's growing with her job. For example, I started with just the $60 a month in employer contribution towards Aflac. Then I added a retirement plan. It's very inexpensive, but I do 3% of her salary. Then I added, a once a year incentive where I have some paid childcare for her. Just thinking of different things that are tax write-offs for you. You're going to pay it to Uncle Sam anyway. So, as you grow, think about ways that you can turn that into a tax write-off and a way to retain employees. Make it a conversation, right? Help figure out what it is that they want. Sometimes those options will even make them start to think, hey, what would I want, right? What could I request? What could we add next year that maybe I hadn't thought of that they wanted to think of? So, invite conversation so that in future years, you're attuned to their goals and needs. But think about it. If you were an employee working for you, which of these 3 elements do you think would be most impactful for an annual review? And I'm not going to, again, engage the chat because I want to have just a couple minutes for if the webinar format will allow for there to be any questions and call to action. But think, if you were someone working for you and an annual review is happening, what would be the most motivational to you on this list? And just kind of make a note to yourself. So, I don't know and I'm going to give, if I don't hear back, that's totally fine. It may just be that we share a call to action and wrap up, but I'm going to pause for just a moment. And either in the chat or people can unmute, and I'll give just a moment for folks to ask a question if the link allows. I don't know if that format is permitted, but if so, this is your opportunity. Right. So these are a couple sources and articles. I'll send this to Sarah after the fact so she can send it out to you guys and add it to your library. This is our contact information. So my name's Catherine James. I'm the regional director. Randy Boehm is a district director, and she is the one who the link here below to book a meeting. She's going to be conducting those intake meetings for those of you that are interested in our services and want to learn more about Aflac and what we can provide. And then, of course, Jackie works directly with Randy. He's going to be quarterbacking this relationship in conjunction with Sloan Appliance, his customer, and kind of be used as the test case for what the partnership looks like. The areas of consultation that we have, obviously, our primary is Aflac voluntary benefits for your business. We do have a couple partnerships with other companies called Get Hired. They do applicant tracking systems, work opportunity tax credit, and employee retention credit. So very excited to connect with you guys in the future. I'm going to follow up with Sarah and make sure that she has this link so that you guys know how to get in touch with us and book a virtual meeting. And we're very excited to partner with you guys as UASA members.
Thank you, Catherine and Jackie. We appreciate it. And if anyone has any questions or wants more information, you can find it on our website at unitedservicers.com under benefits. But also feel free to reach out to myself or Maggie, and we can connect you with Randy or Jackie or Catherine.
Awesome. Thank you, Sarah. Appreciate it.
Thank you. Have a great day. We're excited for this partnership.
Thank you for your time.
Yes. We'll see you soon.